Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Wednesday, June 4th. So we have some economic data on the labor market that is moving markets today and impacting investor sentiment, and that is the ADP private payrolls number. Now, payrolls, according to ADP, increased by 37,000 for the month of May. That is lower than the 60,000 that we had seen in April and much lower than economists had originally been forecasting in this report. Now, we do have the jobs report from the U.S. government, non-farm payrolls being released on Friday. But this ADP report does not necessarily mean that the Friday jobs report is going to be bad. This is just a snapshot. However, it is a piece of economic data, and it's not a great piece of economic data. In fact, in response, President Donald Trump tweeted or truthed, ADP number out, too late, Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. Again, with this weakening economic data, we are seeing the economy weaken. It's an indicator that the economy is weakening, and therefore there's going to be calls for the Fed to cut that interest rate. However, markets right now, according to the CME FedWatch tool, are not anticipating a rate cut until September, when there is nearly a 60% chance, as the markets are pricing in, of a rate cut of about 25 basis points. Now, here's where we stand with some bond ETFs. Now, remember, bond prices rise when yields fall, and yields have been falling on this weaker economic data. Now, why is that? It's because when the economy weakens, investors like to flee to safe haven assets like treasury bonds. And as that demand rises, so do prices, and therefore the yields come down. So let's take a look at TLT, the iShares 20-plus year treasury bond ETF. It is in the green as those prices are going up over 1 percentage point right now. Let's also take a look at bond, BOND. That's the PIMCO active bond ETF. It is also in the green, up about 0.5 percentage point. Now, no surprise here that TLT would be doing the best with this longer term duration. Folks are willing to lock up their money for a little bit longer as they anticipate near term economic shocks or risks. Let's also take a quick look at SGov. That is the iShares 0 to 3 month Treasury bond ETF. It is right at the flat line right now. Now, SGov has been doing well as investors have chosen to park their cash in these short-term duration bonds. However, with this economic data, right now they're going elsewhere to put their money to work. One last safe haven ETF, that's GLD, the Spider Gold Trust. It is in the green, up about 0.5 percentage point right now. Here's what's not doing well. IBIT, the iShares Bitcoin Trust, it is sinking today, proving yet again that Bitcoin has not yet decided to act like digital gold. Be sure to like, follow, and subscribe to ETF.com as we keep you updated on all the economic news and, of course, your investor portfolio.